Hi, and welcome to the Investing on a 9 to 5 podcast. I'm Paul.
And I'm Teddie. We are excited that you are joining our show, Investing on a 9 to 5, where we will talk about our investment journey, our current strategies, and learn about all kinds of investing related topics. But before we dive in, we are not financial advisors. We will not be held liable for any personal investing decisions or losses that you may occur in the market. This page is purely for entertainment purposes only.
Hey, good morning there to the Investing on a 9 to 5 Nation. You've got Paul and Teddie here on this Sunday morning. Hey, what's up, Teddie?
What's going on, 9 to 5ers? How are we out there?
Man, I don't know if y'all been following Teddie on Twitter, but he's feeling a little bit under the weather. So I'm going to be running a lot of this. So he's got some
feeling too good, guys.
Yeah. He's got some good info though to share with us this morning. In the meantime, though, I got a fun little demonstration I've got to show some of the more power of the options along with your dividend stocks. And I hope it's something that's educational. It's something you can do with any holding. Preferably if you have 100 shares of a holding and you want to juice up the dividends you receive on that, then I'll show you a way to do that. But what else you been up to? Ted, I see you got your Chevrolet shirt on. We had that little Corvette Challenger challenge on Twitter I saw.
Oh yeah, the Chevy, we had the E-Ray reveal.
That was pretty
Chevy's,
nice.
I think it was the 70th anniversary.
Yeah, that thing was.
So yeah, that's gonna be all electric Corvette, all wheel drive.
Wow.
It's gonna have a stealth mode and all types of cool features on it. So be on the lookout for that. And I was saying too on the net that they'll be pushing through a Chevy Corvette EV SUV.
Oh, really?
In the market too. Yeah, because you see Lamborghini has a truck.
Right.
A lot of the sport SUVs are Ferrari. They're starting at they have a truck. Bentley has an SUV truck. So that's like a market now, including a Tesla SUV truck. You can those are pretty quick too. So that's a market that I can see them going at, but I haven't seen anything come across my desk saying that it's official. But who's to say? Who's to say that they are not pushing that? But yeah, that E-Ray is going to be awesome, man.
Yeah, I know we're both long GM, so that'll be fun to watch that develop.
Yes, yep. And guys, there's a market for the Corvettes. People are buying them.
Well, yeah, you got
a list.
I've always pictured that. It's no dignity, but to me, the Corvette has always been, for guys like me. the boomers who are hitting their midlife crisis. So I think that demographic is growing for sure. So I think
I want one right now.
Like I said, no offense to if you're younger and you want one. That's just been something that it's kind of a joke in my mind. I keep it to myself though. I should have just done that now.
No, you're good, man.
So all right, well that's cool. That'll be fun to watch out for. I've always liked the Porsche SUVs.
Oh, even Porsches too. Yeah, the
Porsche.
Yep, Porsche's got SUVs too. Yeah. What's been going on your end? You got we got spring training on the way, so we got Cardinals, eh?
Yep, February 15th, I think. Pitchers and catchers report to spring training. I'm here now in the Mid-South area where we're not very far from St. Louis or Springfield, Missouri, which is where one of their lower minor league teams are. I'm real excited about that. I was going to go. So every year, and I know the Braves you were talking about Brave Fest or something coming up. They have.
Yes, I was supposed to go, and here I'm sick.
The Cardinals do a Cardinals caravan every year. So in St. Louis, they'll have this big, autograph session, meet and greet session with the players and stuff like that. But then they also send out these buses of current, former, and broadcast staff. So they came to Joplin, Missouri, which is less than an hour from where I am. I had big plans. I was ready to go see it. Lars Newbar, this up and coming rookie, was one of the participants this year. I was really excited to see him. But then it was my daughter's first basketball game.
Yes, I remember you telling me that.
Yeah, she's 7, going on 8, and I'm like, okay, well, I'll miss her first basketball game to go check out the Cardinal Caravan, and that was actually the plan. And then the coach emailed or texted everybody saying it's going to also be picture day, where we're going to do the team pictures and individual pictures.
Okay, yeah.
So I'm like, I can't miss that. That's documenting this part.
Yep. So, that's the stamp right there in the book.
Right. So we did the picture day for the basketball. Went to her first game, and
awesome.
I passed on the Cardinals caravan. So That's okay. It was worth it. She had a great time in her game, and she's really loving it. We're gonna go see in a few weeks. They're doing a special at the college. So Arkansas University of Arkansas is not far from here. So any Razorback fans out there, that's where we're gonna go check out the women's basketball game, so she can take a look at that and get hopefully some inspiration from watching the college level play, which would be fun. I've never been to a basketball game before like that. I've been to high school games, but I'm looking forward to it.
Oh, basketball is awesome. That basketball is my my second favorite sport out there. Baseball, my first.
Who's your team?
I mean, for basketball, I'm a Pistons. Pistons.
Okay.
I like the Pistons. Pistons right now. It's seconds to Hawks because I live here in Atlanta.
That's what I was wondering. I know you support your Atlanta Braves, but you also have your Detroit teams.
Yeah, yep. So I even though I've moved quite a bit, so not quite a bit, but bouncing from here to Detroit, so it's gotta have my balance there, I would say. But Detroit teams definitely would come first.
Well, you
obviously my New York Yankees out there are
gosh.
I know I get that same reaction when I tell people my name's Ted Williams and I'm a New York Yankees fan. They're
right.
Like, what?
It's too perfect. Oh, man. So I'm looking forward to it. Looking forward to spring training baseball.
Yes. Yep. I'm looking forward to it as well. Awesome.
So we were looking at, I forget even how it came up, but I know you've been into MPW for a while.
Yep. That's my my second longest. That's my second position that I've held the longest.
Yeah.
Besides ET. Mm-hmm.
I have held it. I don't currently hold any. So this demonstration I'm going to show is solely a demonstration, and it's not anything that I'm actually doing. But it's just something that, like I said, if you have 100 shares of a position, then this is something you can look into to see if it's worth your while to run this little experiment on. Here's how it works. Let's assume that you have 100 shares of MPW. Okay. Here it is, Medical Properties Trust. It's a healthcare REIT. It pays a quarterly dividend. That this was, I think, I screenshotted this on the 19th at 10 a.m. So right about then it was yielding 8.6% dividend yield. Look at that, 55% dividend payout ratio and a 3% growth rate. Not a bad and not a bad stock. So there's a couple of things that make this for me a good potential for this little experiment I'm running. Number one is there's been some news behind MPW, right? It's been a little bit volatile. It's been in the stock market. The price of the stock has gone up and down at some less than just like a normal daily kind of grind. It's got some about some of its holdings, about some people whether they can pay their rent or not. So that's caused some volatility in the market. When it comes to options, volatility is your friend. Volatility is what increases premiums that you can collect on different things. So having a stock that's got some volatility is going to give you the opportunity to collect some premiums when you are making different options trades. So in this case, and this is a very conservative layout, this is a very assumptive numbers I'm using here, but it kind of gives you an idea of how you can juice some dividends on a play just with 100 shares. So in my hypothetical situation here, on the 19th, we bought 100 shares of MPW. Right then, it was traded about $13.37. I don't even know what it's trading at right now. So
let me see.
Go ahead.
Go ahead.
13. So that was a $1,337 purchase for the 100 shares. What I would do then is turn around and I looked on that day, and the call option for the next day was trading about. It was actually trading about 8 or 9 cents. I changed this to 5 just to give a more conservative outlook on it.
It's $13.72 right now too. Last close Friday.
Okay, so I'm up already on the position hypothetically.
Yep.
So what I was looking at, I'm gonna show you what the option chains look like. Because of the MPW strike prices, there's not much premium above the $16, $17 range, right? This was a February 17th call option chain. And when I look at the chart, I didn't screenshot the chart, but the chart looked like 16 was kind of a resistance area and maybe something that would be difficult for it to achieve in the short term. So when you look at this, like here, the $16 call strike is trading at $6 or $7. That's the bid and ask spread right there. So if you come back over here, I went ahead and made a hypothetical sell at $5. So what this means is I'm selling a call option against my 100 shares at $16. So what that means is that, and with a February 17th expiration date, if MPW is trading at $15.99 or less on the 17th, then that call option expires worthless, and I keep the premium of $5. If MPW is trading at $16 or more at the close on the 17th, then the call option is in the money, and the person who sold this to me, who paid me $5 for this contract, has the option to then take my 100 shares at $16. Okay, so that's the risk. There's always a risk and a reward when we're doing these things. The risk is you can have your shares called away from you if your contract is trading in the money. That's why I look for the furthest out strike, so to kind of protect that downside, but also collect a little bit of premium on the way. So with this one, I'm not looking for like these huge home runs, to collect, because on some options, I mean, depending on the price of the stock, you can collect thousands of dollars for a contract,
right,
or single dollars. So with this one, because of the price it's trading at and the volatility and the strike I chose, $5 was where we were going to get some money for this thing. It was actually, as you see on the options chain, it's actually 6 or 7, and 8 or 9 is something you could actually realistically count on. But this is what it was looking like on that day.
Okay.
It's good to note that day MPW was trading up, which generally makes the call options worth more. So it's not up very much. It was up 2 pennies. Get them dogs down.
The divvy dogs.
But so you can also make decisions on your trades based on the market action that day of that contract of that stock. So if you look through my little chain here, hypothetically, you could make changes to the strike each month as you go. So let's say this one expires worthless, and we're going to go look to sell another contract for the next month. Maybe by this time the stock has ticked its way up to $14, $15. Well, then you're going to look for a call strike. Maybe you're looking at $17 or $18. You're just going to have to look at this option chain and decide based on what the stock is trading at, what strike you want to get. And as you get used to doing these, you'll notice how these things change, how the options change, how the implied volatility makes the changes happen. And it's something you'll get used to doing as you do it for a little while. So I went ahead and did a little rundown just with the Goldilocks example that this happened every month. You were able to sell the contract every month. It expired worthless every month. You collected your dividends along the way. I noticed that we look down here. We got their dividend growth chart shows that they've increased their dividends every year. And according to their historical dividends, they're up for a dividend increase. This next payout should be a penny. If it go along with their history here, it looks like they should be increasing by a penny on this next dividend announcement. So I went ahead and went with that assumption as well. So we assume a 30-cent dividend is a $30 total collection on 100 shares. Based on when they paid out in the previous years, I went ahead and estimated the dividend payout days. So what this comes down to is at the end of the year, by next January 2023, on my 100 shares, my original purchase of $1,337 would be reduced down to $1,100 because of the collection of dividends and premiums, which means my strike price, or my original purchase price by cost basis, was reduced from $13.37 to $11.57. This doesn't, and so so here's the example of the year of dividend payouts, $120. You collected, 8.9% dividend yield just without any options. But if you you add the options to the dividend, you collect $180 for the year, which brings you to almost 13.5% annualized, basically a dividend yield on that stock. So you can almost double your dividends. But like I said, the risk in that whole deal is getting called away. And if you get called away, the way that most people who I interact with run this is it's kind of a version of a wheel strategy.
Mm-hmm.
If you do get the stocks called away, then what most people would do is just buy it back, or they would flip the script and they would start selling the puts, which is a whole nother thing we'll go over another time. I don't want to get too much into this, but that is an example of the strategy and the math behind it. Now, if you were going to do it, what would you do? So I broke down a little screenshot here. This is from Fidelity Active Trader Pro. All platforms have the same mechanics. They may look differently. If you have a different platform that you use, then check with your broker for help. Or I'm sure there's plenty of tutorials online about how to set these contracts. So to sell it, go ahead.
Would you, for any listeners, would you be able to look at this call here, February 17th, 2023 on like Robinhood or E-Trade?
Yeah, these are all available on, if your platform allows for options trading, then these are allowed. Your ability to do so may depend on whether you have a margin account or not. Those are something you have to look into with your broker. There's little technical things involved with that, but once you've got that sorted out, this is how you do it. Excuse me. So to sell the covered call, you have 100 shares of MPW. You'll open the box for the trade. You're selling to open one contract for February 17th expiration date at a $16 strike. Make sure this says call. So you're selling the contract, which gives the person you're selling it to the power. They have the power to decide if they want to take the shares or not if the strike price is within the money, which is $16 or more. In this example, I put a limit order, which is the most I'm willing to pay, and just for example, 6 cents was the ask or the bid, so that's in there. And that's it. You'd hit preview. It'd show you your total cost, your total net gain on this one, which would be after expenses, a little over $5, depending on what your broker charges for contracts. And then you click enter and you wait for it to fill. Alternatively, like I was talking about the put side, you could sell to open a put. It's the same thing, except you want to double check that you have put in there instead of call.
And call.
Yeah. Yep. So this is a cash secured put, and in order to do that, you'd have to have enough cash to buy the 100 shares at the strike price, and then you sell to open. So since I forgot I had this in here, we'll go ahead and go over it real quick. So what this means,
just to reiterate, guys, sorry, Paul.
No, you're okay.
To buy a call, you would have to have 100 shares up front, right? And to buy a put, you would need to have the cash up front. Is that
to sell,
right? To sell it, right?
Yeah.
Okay. Yep. There we go.
You can sell calls and puts without having the cash or the stock, but those are naked positions, which open you up to a lot more loss. So those are some of the ones unless you're a sophisticated options person, you don't want to get into that mess.
But we're 9-to-5ers. We're doing long-term investing.
9-to-5ers, yeah. We're not hedge funds. We're not people with lots of money to put at risk like that. So this is the way to do it. So you have a limited downside. The limited downside on the call option is, it's not really limited, I guess. It is limited because if it's trading below $16, you're keeping your shares and you're set. It's got limited upside. You're capped at $16 a share. If for some weird black swan event happens and MPW rockets to $100 a share, well, you're kind of stuck with yours at 16. They're going to take it at 16. There are ways to manage the trade rolls and such, but they're more technical, and I'm not going to get into those.
Okay.
I do those on my own because I've got positions that they're in the money, and I don't want to get rid of them, or I don't want to take assignment of a contract, so I roll things out, but we can go over that another time. Excuse me.
Yeah.
So the put side, I use $14 as an example. It's an in the money put. So what this means is when I sell a put, that means I'm agreeing to buy these shares at $14 if the stock is trading at $14 or less. So if it's trading at anything under $14, if it's at $15.01, it's out of the money. I'm not going to be assigned the shares. But if it's at $14, it's mine. So what I'm selling here is I'm selling the right for the person who sells it to me to give me the shares at that strike price. You're going to get more premium on that, which also theoretically reduces your cost basis. So in this case, if I have the option order here for $1, which is $100. If I were to get that, then I'm getting the contract I'm getting $100 in order to sell the contract. So that goes in the bank right there. And then if it's
Yep.
trading at, if it's trading in the money, then they can assign the shares to me. Because I got the contract for $1, my cost base is automatically reduced down to $13. So, even if it's trading at 14, I'm already ahead of the game because my cost base is lowered. If it drops down
Right.
below 13, then, then I'm in the red. But, so when you're doing these though, that's your risk, is that you're going to get assigned the shares if it drops lower. But it's also why we say you don't want to do these options contracts unless it's a stock that you want to own. So if you really want to own MPW, but you don't want to pay, $15 for it, then go ahead and sell some puts on it and wait for it to come down to you. You can do this monthly or weekly. Well, you can see this one, MPW trade has weekly options. So you could theoretically do this every
Dang.
week.
We didn't even see that.
Yeah.
Or was
so,
that ET we were looking at that doesn't have good volatility?
Yeah, we were looking at another one. They only had monthlies.
Okay.
Some only have monthlies.
There we go.
But MPW trades weekly. What I was showing you over here, you could theoretically do weekly. You didn't have to do it monthly, and it would increase your premium collected out the year. It takes a little bit more managed activity. So I was trying to show an example to people like us who have our jobs and we maybe can't check in every week, or we have something going on during the week that's going to keep us busy. This way, you're not going to get caught, blindsided because you're selling out a month. You've got a few weeks buffer before you have to be checking your portfolio.
Yep.
But that's the down and dirty rundown on MPW on how you can juice some of your income you received.
And then also, Paul, sorry, you mentioned too. I didn't mean to cut you off. You mentioned too that you were in the money with your call.
It's in the money
meaning
on the put
that
side.
In money on the put side, meaning that's is that like a good signal to be in the money?
Well, it's not a signal either way. It's just a risk level. If you decide that you want this no matter what, and $13 is your price, then sell the $14 put for $1. Your basis will be 13, and on February 17th, if it's trading above, if it's trading at $14 or lower, then you're going to get it.
Gotcha. Okay.
But some people use as a strategy for this call put option, the wheel option, is looking at delta. So delta, like we talked about before, is the chance of the stock being in the money at that strike price at the time of expiration. So what I see a lot of people doing are going out, like 10, 11 delta when they're making their trades, because that's a little bit buffer that contract may expire worthless, but you're still getting some premium. So what I was looking at here, the delta on the 16 is 9. So that's why, that's another reason why I looked at the $16 strike price, because the 9 delta means that there's a lower likelihood that it will be in the money at the time of expiration. On the put side, when I do this, I'm looking for about 15 or 20 delta, because I'm looking at stocks that I want to own and I want to get them at a good price. So at 15 to 20 delta, then you may have an opportunity to get that by expiration.
Gotcha. Okay. Cool. Understood.
So anyone out there who are listening and who are interested or have questions about this, there's lots and lots of people who are way more experienced than I am in this. I've been doing this for a while, but I would by no means call myself an expert. I would only feel comfortable showing you examples of how it can be done and not giving you recommendations on what to do. But it all, if you have an idea and you want just somebody's input on it, shoot me something on Twitter. Let me know. I can make a quick look at the options chain and give you my opinion as whether or not it would be a good stock to do this on. We looked at, I think it was ET not too long ago, and my initial reaction was based on the premiums that they were paying for the contracts. It wouldn't have been a good candidate, because on this one you can see, a couple strikes out of the money and you're still getting, $17 to $20 for the contract. On ET, I think like the one strike out of the money and you drop down to like 0 to 3 cents. There was just there was no movement on it. You can see there's some decent volume here, on MPW.
Yeah, and ET didn't have any volume either.
Yeah, that was it. So if this one's got volume, this is trading a few hundred contracts a day, which means you can get 1 or 2 in probably. It'd be tough for you to get these down here because there's no volume in these other strikes. But so it's got this narrow window. But again, MPW I think is a good one because of volatility that it's shown recently in its stock price.
I really need to get in on this because I really
that's
do have.
And that's why I picked it, because I asked you. I texted you, what do you have that you have 100 shares of? And you're like, oh,
because I really do have. Because I really do have some MPW.
Yeah. So, and what you can also do is, you can get into based on like your strike. What some people do are they do at the money no matter what. Like they'll go ahead and sell the call at the money, collect $1 on it. And if it gets close to expiration, they'll either roll it, or because their cost base is so low, they don't mind selling it at 13. If you're in at $10 and you're a trader, then you're less a dividend investor and more of a trader. So there's other strategies that people use, just based on your goals. So
yes,
being primarily focused on the dividend collection, that's a way to do it that has a limited risk and some benefit upside to collecting that premium.
Yes, sir. I'm gonna take some notes on this and really look into doing this because I wanna generate so much income off of MPW as much as I can. Yeah. And looking at this here, I can really be making over 200 annually if I were to do this.
Oh yeah, if you have more than because you can collect, you'll definitely get more than $5 per contract.
So I'll instantly just boost my dividend income. Perfect.
Yeah,
so I'm shooting
with risk.
Yeah, obviously with risk, but you got to risk it for the biscuit out here. You got to.
So any questions? Awesome. Any questions, guys? Hit me up. Hit us up on Twitter, and we're happy to either give you our opinion, or I follow lots of guys who do this on a regular basis with some real money, and they have great ideas that get put out there too, as far as stocks they're doing, contracts they're selling or buying. So that's how I learned. I learned by watching them and going and doing this kind of stuff, looking at the charts on myself, looking at option change on my own, seeing how they work, and getting into it. So it's been fun. I like it.
Oh yeah. No, it's definitely fun. Like I said, I have an options will book over here, will strategy book that I ran through last year, but obviously I didn't have 100 shares. I only had 100 shares of ET then, and it was like I read about it and I was like, sounds cool, but now looking at the strategy and seeing it laid out, it's starting to turn some gears in my brain. So hey, you see SOFI went up this month too.
Man, that did. And that, so I have,
I'm still getting there.
It's on our, in our link tree. There's a link to the sheet that I'm doing that on. And I think that expired on Friday. So on Monday when I go in, I'll look at that one, because I think that contract expired. So I'll look at selling another contract. This is our,
go ahead.
This is the sheet right now. It's public, so you can go to our link tree, and there's a link to this sheet right here. So this contract right here on SOFI expired out of the money. So I can go back in on Monday and I can look at selling another contract. So we've been collecting $10 here, 10 here, 16, 50. So we're up $100 on SOFI. We don't own any shares of it. This is completely just selling the cash secured put.
Yep.
So it's $100 on one contract. It's a way, and this also expired. Palantir. I think I rolled this one out. I think I got to update this. I got to go check and see, because I would let it expire. It's out of the money. Palantir's trading at what, like $60 or something like that now. So I got to go and we'll sell another contract on Palantir. We'll sell another contract on SOFI, and we'll keep this going. So you can see already on Palantir, our original price was $8.95. We've rolled that down to $8.47 through selling these contracts, and then
I don't see the $7. Yep.
Yeah. So we'll sell another. I'll look at and this is one that I'm talking about. The strike premiums are going to be kind of low. I've been watching it, because it's trading so much below what we would want to sell it at. In the $8.50. The premiums we get are pretty low, but I'm going to keep doing it just to show that it's something you stick to. If you bought the shares and you want to stick with the company and you're a long-term holder on it, this is something you can do on a monthly basis, just to add that extra income, just to add that little bit of extra income to your holdings on a stock that doesn't pay dividends.
Mm-hmm.
So we will look at that on Monday, and I'll probably have an update on our next episode. I'll go over what we do on this. But like I said, this is live on our link tree. If you want to check this later in the week and see what updates have been made, then you'll be ahead of the game.
Paul, thank you for the update with SOFI, Palantir, and MPW.
Mm-hmm.
once again, I'm a strong MPW holder, long MPW, so I definitely would like to take a look at that and join the journey on creating some more dividend income. So I'm going to pivot over and just give us an update on a couple things. We got an update. We got some Comcast earnings and Intel earnings this week. I'm going to talk about those. So what do you think about Comcast, Paul? What do you think about how's it been performing for you in the portfolio?
It's been good.
It's been good.
Yep, I went ahead and bit the bullet and bought some Comcast, and it's been a good one. It's been good so far. I don't have it up my screen right now, but I know I looked at it the other day and it's up, so good.
Yeah, I'm actually about to pull it over now and show it. All right. So as you guys could see, this is just my brokerage part of my portfolio here. But we got we got Comcast in here. Got 21 shares, up 11% on it right now, which is very, very strong for us. Still going good. Everything else, obviously, in the portfolio is going well. Got Avi still going strong. ET's going strong. My Kroger is down 2%. I'm not really worried. SCHD, I'm at 41 shares here, still going strong. And right now it's up 6% in this portfolio, where it's at we're at 8,600. And it's up 6% right now year to date. So nice. Yeah, this part of the portfolio is off to a good start. Overall, it's at 24K, almost at 25 total. So yeah, it should be a pretty solid earnings coming up for Comcast. So this is the upcoming Comcast expected kind of analyst report that came out last week. Earnings is supposed to be very good for Comcast this month, guys. So that's very, very good sign. We're supposed to do earnings of 78 cents a share, which is up 1% year over year. Revenue is supposed to be up too. So those are obviously good signs for us long-term investors, which could help move the stock higher on those days when earnings are going well, which is good for us. Comcast has still got that target price of like $44, $41, still undervalued on my books. And I like what Comcast is doing. They have a lot going on with Peacock. They have all the television companies. They got 5G testing, 10G. So they're doing a lot, and and they're providing cable too. So Xfinity customers are still paying for Xfinity. They're still finding ways to attract those customers and keep those customers paying. So that's just helped generating revenue as well for Comcast. So I'm expecting a good earnings call. It could go totally south. Guys, they could, the stock could go totally south on earnings, but I'm expecting it to go high. So don't come at me sideways on Twitter. It goes down on earnings.
That's not it, but that's the benefit of being the types of investors that we are, is that you're not hanging on every movement of the stock. We're looking at, a bad earnings call might bring the price down lower, but if there's nothing on the earnings report that scares you, if they don't all of a sudden come out with some crazy news on earnings that makes that this is no longer a stock that you like, then like you hear all the time on Twitter, that's just a buying opportunity. If the price drops and it doesn't change your conviction or your investment thesis, it's just an opportunity to buy a little bit lower if you want to add to it. If it's a great earnings call and it goes up, then great, you're holding a good stock. If it's a middle of the road call where they're talking about some challenges down the road and the stock price drops, then you just stick to it. You just hold on to your position and ride it out, because we're long term here. I mean, all these companies, have ups and downs. You look at Apple, and there was a point where Apple was basically a penny stock, and no one wanted it. No one would touch it.
No one.
And then and it just the right tailwinds hit, and then it can run. So we'll see.
And we can say the same thing about Tesla too. I remember, working at Enterprise Rent-A-Car when I first got out of college, and someone was, I remember someone was saying about Tesla stock. I think it was like $116, $117 at the time. I remember, and I was like, man, I can't afford to buy this thing. When is it supposed to go up? I remember, thinking that at the time, and never really dug into it. But Now look at the stock, like obviously it's gone through its, its ups and downs, but over time it's going to be a heck of a stock,
Right. And for those who don't, if you don't remember, Tesla was trading at $700 a share before it split. So that's what you were talking about. People who were in at $100 who rode it up to 700. So
yes, yep. So next we are going to jump over to Intel, INTC. So I am not expecting anything good for this earnings report at all. Obviously, it's this whole semiconductor market is just up in spins right now. Everyone's trying to figure out what they are doing next. You're over in Davos. Is it the convention in Davos?
The economic forum.
The economic forum, Intel and all the big players, they were over there speaking, and Intel, the CEO said, the semiconductor market made a mistake on, misgrading or disgrading Intel. So obviously this earnings report is not going to be good. They're going to be down on revenue. They're going to be down on earnings per share, which doesn't make it a bad stock, because this is expected as an investor. And I'm expecting this because I am seeing what they are doing for themselves long term for 2024 and once again 2025.
And you're long Intel.
And I'm long Intel.
Okay.
I remember our first episode of the year, I was talking I'm going to be chasing 100 shares of Intel, and I have been doing that for the month. And for this month here, I'm doing this in my M1 portfolio. I've accumulated 14.6 shares this month, or I would say within the month since December. That's when I started doing it. And right now it's sitting at a 9.89% return. Can you see that? You see that, Paul?
Yep.
Okay. Yeah. So, 9% return. So I'm not really worried about this stock. I feel like I got in at a great time, and I'm just dollar cost and averaging every other week or every week. I can, find a way to scavenge up $29 to buy a share of Intel. It's still undervalued in my book. Now they could have taken a lot of the money and cut the dividend to pay back a lot of the debt, but that's going to send a bad memo once again to investors if they're going to be holding long term, because there's guys holding long term on on Twitter for Intel. There's guys holding really long term. So, and that's another sign for me as an investor, say, hey, there's some guys, there's some bulls that are that's down 25% on a lot, and they still are buying shares, and they still see the vision. And that helps out with my research too on purchasing Intel, and they're making chips here in Columbus.
Okay.
Yep, they're building that. They're building a huge semiconductor city basically, and one thing that's going to do is going to provide jobs. That's going to provide housing. That's going to bring in all types of other businesses that Intel's going to need. That's going to help out that economy there.
Are you expecting some comment about the dividend during this earnings call?
No.
Okay.
The CEO from Intel, they stated in an article that their plan is not to cut the dividend.
Okay.
They could have cut the dividend last quarter and paid some of their debt back. But once again, like I said, that would send a bad note. That would have everyone sell right then and there.
Yeah, I've got Intel in my in the dogs of the Dow portfolio, so I'm looking at it. I'm looking up, and I'm up on that one about the same as you, about 9.7%. So that's good.
Yes, yeah. So I'm like I said, I'm long Intel in my chip portfolio on my M1. Now, my second one would be Qualcomm. That's going to be another one that I'm going to build up. And then my third one would be Apple.
Okay.
So those are my three chips that I'm going to be dipping in. You guys get it?
Dipping the chips. Bum.
There we go. Yes. So that's my little run through for a little update on the portfolio and some earnings reports that's going to be coming out this week that I'll be keeping my eye out on. I think Microsoft's got their earnings report too, right?
Yep.
Microsoft, 3M, IBM. I'm really excited to see what the airlines are about to do because I have no airline exposure. Delta keeps coming across my list as a stock to watch.
I am long Delta in one of my portfolios. So
okay,
that's one that I've heard just based on debt and their increase in sales and some of what I've read about their just kind of their user experience compared to other airlines. They're still kind of their performance has been over the other one. So I'm long Delta in one of my portfolios, so I'm looking forward to that one too.
Yeah, and funny you say user experience out there, guys. So I saw a article that a Delta attendant was sitting on the floor holding a customer's hand while they were flying because she was so scared to fly that he was explaining to her every single bump and like sound that the airplane was making, so she can be like assured. Yeah, like I'm like, look at Delta. Look at Delta. Make me want to buy the stock.
We'll see.
We will see. So next up on my list that I've been looking into is a company called Mobileye. Mobileye, and they are a driver assist functions like company. So basically they have the cameras on they're basically like the cameras on the cars. I'm trying to get over to this screen. So what they make cameras that will go onto like the front and the top of these cars,
right? And
as you can see, these are all the products that the cameras are already implemented on. So you got GMs, you got BMWs, Volkswagens, Kias. So they're already implemented into some vehicles. And they're already going to be fully automated by 2050 with some of these the autonomous cars, and they're going to have autonomous like robo taxis. I know this sounds crazy out here, but this is where the world's trying to go with being autonomy. And they're obviously, this is how they define the customers. They have a hands-on or eyes-on, hands-on, eyes-on, hands-off, and so on, all the way up to like no driver at all. So yeah, they're basically responsible for all these type of technologies, and they're making it, all the way out to urban and rural areas. And their cameras are so smart on the cars, Paul, that they'll be able to pick up like different people, moving objects, things in the rain.
Wow.
Being able to know if things are falling off of like an object or falling off of a vehicle. So it like obviously this goes way into the portfolio of what they do. But look at this. You'll be able to fully have a camera going fully around your vehicle. At one point here, being able to know what is going on. The car will be able to feed information on what is going on. And these are cameras that are already on cars, that will be on EVs, and that will be able to connect to the 5G towers. And what's going to be implemented into these cameras? More likely chips. Once again. But yeah, this company, Mobileye, they are on my list as a growth company for 2023. I'm gonna I've been buying some more shares now. I'm gonna buy some more shares, but I've been purchasing some, and it's been performing well. I'm trying to get to it right now for us. This is my M1 portfolio, guys, since I already have it. So I started this back last summer. I've just been kind of just throwing money in, $100 here, $100 there, kind of just been going in and out.
Nice.
And it's starting to take off now. Because I stopped here, I was dead, wasn't doing much, and then it started to take off here. So I got within M1, guys. I have a portfolio in M1. I have a Fidelity one. and this is my my M1 portfolio here. Sorry. So, but within M1, you can break it down. You can do technology, chips, REITs, or you can have it any way broken down the way you want. I just have it broken down this way. I've been spending the majority of my time in my tech spec portfolio here. And I've just been buying a lot of NEO, Plab, and then I've recently been buying Mobileye. So I purchased some this week here, and we got it up over, well, we're up 5%.
6%, yeah.
Or yeah, a little bit over 6%. And, you know, looking at the articles here, it's a chip leader to focus on. You know, they're in the driver's seat for autonomous driving. A lot of companies are depending on this company here to lead the way with their cars on autonomous driving. Yeah, it's in their IPO too, but they're also not like a new IPO. Like they went 1 year public, but they weren't ready. That was 20 years ago. But now they took 20 years to get all their stuff. Yeah, they took 20 years. That's why I was like, whoa. So they went IPO, then they went back private. So they went 20 years undercover to get everything ready because they knew that, you know, this was coming here. And they were recently at the CES too out in Las Vegas. And they were doing a lot of promotion, and they had a lot of foot traffic at their booths.
I noticed when we got our new van, I was amazed at like that. You put it in reverse and you got the camera showing your bird's eye view of your van and backwards and forwards and side to side.
Yeah, it shows everything. It shows everything. And then guys I know it looks a little sloppy here on the portfolio if you're looking at it on the YouTube, but I'm going to find a way to get all of my holdings onto one screen to show the full portfolio because I have them on different platforms. So we will get to that very, very soon.
I think it's important that these guys know that, I mean, we're not just, you know, we're talking about stuff that we buy. We're talking about stuff that we like and the reasons why. Not at all saying this is what they should go get into, but I mean, this Mobileye is new to me, so I'm interested in looking it up and find some more information on it. I've taken your advice on a couple of different positions I'm into, which is cool. But this is a new one. I'm really interested in looking at this one more.
Like they're going to be on NEO cars too. That is another reason why I love them.
Your NEO.
Yes. Yep. And they're also linked up with Intel. So look at that. So it's, you know, that's how I found out about this because I was reading about Intel, how they're having something with Mobileye and NEO, and so I was like, oh wow, this is a cool company. And revenue's been increasing too.
Good.
Revenue's been increasing too year over year. So, and it's got strong buys.
Sounds good. All right, man. Cool.
Yeah. So that is all from the D-Dog on this.
Right. Well, if any y'all
rainy Sunday.
I know. Well, it's nice here. If y'all have any questions about Mobileye or Intel, Comcast, hit us up. Hit the Dividend Dog up on Twitter. He's got lots of information, lots of details, and he loves talking about it. If you haven't been able to tell, if you get him going on Comcast on Twitter, then you're gonna have to actually just say, "Okay, dog, I'm sorry, I gotta go."
Oh my God! No, serious. Listen. If you got it, Comcast, you're up 15%.
Yeah, you're good.
You're good.
All right, guys. Well,
you're good.
We appreciate y'all turning in this week, listening to us ramble. We're
yes, guys. Thank you.
Yeah, we're getting some more good guests lined up. We're getting some more information and data that we're trying to put together to have some content for you. Go to the YouTube channel. The dog has been very prolific in doing some short videos about specific stocks or sectors. So I highly suggest you go check those out. I'm working on finding the time to download those and convert them to podcast episodes so they get posted on here so you can listen to them. But definitely check out that content. He's putting a lot of work into it, and I appreciate it. And I know he's having fun doing it. So which is why we're doing it. If we weren't having fun,
so much fun.
Yeah, we wouldn't be doing any of this kind of stuff. So, from Teddie the Dividend Dog and Paul at Options Legacy on Twitter, thanks for joining us on the Investing on a 9 to 5 podcast, and have a great week.
Yes, guys, have a great week. We'll see you on the next one. We out.